today. Matt, how are you doing? Are you dojing at support?
I am doji at support, and so is the S&P 500 coming in at that 400 level, right on the right on cue, right on cue. You know what else happened right on cue? Volatility hit the market, downward drift in the market, and James Bowler changed his tune on interest rates really quickly too.
Yeah,
That
and we
changed
talked
as
about
well.
this on the podcast yesterday. If you haven't checked out the most recent Trading Justice podcast, go give Matt and I a listen. We talk about the case for downward movement and little skeptical about how strong. And we certainly, well, we called out, didn't we, Matt? Like, you have a couple
Uh,
down days, all of a sudden the Fed's not as hawkish all of a sudden, right?
yeah,
Like, it is
for
just,
for 2 straight weeks, all we dealt with was hawkish language, higher for longer. It's going to be a tough road ahead type conversations. One day after the market violates support, volatility hits the market, downward movement in prices occurring. Everybody on Wall Street is looking for lower prices. James Bowler gives an interview today where he talks about, and this is the same James Bowler who, in an interview in December, gave the language of 7% interest rates. And I'll remember that. And so should everybody here on the halftime report, given the fact that I said he's lying literally on the halftime report. He's not telling the truth. This is absolutely ridiculous. He shouldn't even put that language out there. This is the same guy who said that type of thing 2 months ago that got a response from me, and that was that strong. He came out today and he said the U.S. economy is stronger than others realize. That the terminal rate isn't nowhere near 7%, but it's probably going to be right where the market, where the Fed kind of expects the terminal rate to kind of end at 5.4%. And then he also came out and said, "Hey, I think we have a really good chance of beating inflation in 2023." James Bowler, that's as dangerous of a commentary as a 7%, because you're not going to beat inflation in 2023 and you're not going to 7%, but it's just a tell to
it's
how the Fed,
symbolic, right?
to what the Fed does here. And I kind of expect I kind of expect a little bit of the speeches from the Fed in the next couple of weeks to kind of follow suit as the market volatility has picked up a little bit.
Well, while the Fed might be a bunch of inconsistent buffoons,
James
Tyler,
Bowler, the most inconsistent.
Jay Powell's in there too. I'm sick of the guy. Uh,
Others are as well.
Tyler Craig is not a buffoon. He is our Jedi. How are you doing, Tyler?
I'm good. I'm glad that phrase went the way it did because it could have gone a different way. And so I'm happy to be here as the resident non-buffoon. Good to be here on a Wednesday. I liked
See,
it when
this
I've
is
seen your
why he always beats me in Trade Masters. He's so damn likable. Like,
Yes. Uh-huh.
I appreciate that. I did not win last
Well, that
week
was an
though. I did
insult of
not
your
win last
trading
week.
ability and a
Oh my
compliment.
God.
Listen, a W is a W. I'll take it either way I could get. I'm happy today. I'm excited to be here. Glad the market's taking a moment to find its footing. I did not want a day. I did not want a second consecutive day like yesterday.
Yeah,
So,
well,
Well,
technical
let's break
technicals
down
are
that
all that
doji.
matter in the next couple of weeks. I think we can all agree with that. You guys are two great technicians. Have a couple minute conversation on the indexes. Break down the technicals for us.
Yeah, Ty, I'm looking at that support level. We talked about it quite a bit yesterday. Really kind of dialed in the multiple time frame where is support conversation that we oftentimes do when technical support is violated on the daily chart. You always want to get an understanding. Okay, where can this go to before you start running into some pretty decent support levels? Where can you anticipate a little bit of those buyers stepping in? That's the
mhm.
conversation we had yesterday, and we kind of looked at 400 on the SPY. That obviously is 4,000 on the ETF there. Tyler,
Mhm.
give me your technical breakdown on both the daily chart, the weekly chart, and then give us kind of in that micro data, the intraday chart, to kind of look at what's happening today.
Yeah, the point I want to lead with, Matt, is you just said it. The fact that we broke 405 and you're like, all right, we got support at 400. Like that right there is why it's kind of hard to get overly aggressively bearish on one support break
Mhm.
because there's so many other support levels below this. That's what happens when you have the kind of reversal that you had throughout January, right? You built new support levels because you broke a bunch of resistance levels. And yes, we broke support yesterday, but that's different than breaking support on a downtrend. We got nothing beneath you, right? So we are going to have a lot of potential levels here to look at. I will start on the weekly here, Matt. So let's take a look. I mean, the thing that we all really liked in January, there's a lot of things to like, but one of them was the fact that you made a higher high on the weekly chart, right? That was followed up.
I felt that was
low.
very important in the moment. Yes.
Yeah. And we broke the 50 weekly moving average, which has been about a year since that happened. And the volume and the magnitude of the move, right? So we all turned bullish because the technicals demanded as much. And the last 3 weeks have kind of been like, market needs a breather. And then yesterday it's like, oh, come on, man. You need more than a breather, huh? You broke a low short-term support, which we'll get to in a second. But on the weekly chart, I mean, look, 3 red bars after a bunch of green bars. You're testing the 50 weekly. I like the 400 for the psychological significance.
Mm-hmm.
Ironically, on the weekly, I don't know that 400 is all that easy to anchor on, other than just being the 50 weekly, maybe even the 9 weekly. I think it's more the daily, but even more just the psychological number. I don't mind this on the weekly, Matt. I mean, I'd prefer it bounces here and doesn't go any lower. But even if we pulled back to the 20 weekly, it's still a higher pivot low, right?
On the weekly, it is, yeah.
You can't call.
Do me a favor real quick. Draw me a line connecting 2 previous pivots on the weekly chart, kind of where that lines up. It lines up more with the 20 than the 50.
Yeah, so that's the thing is you for the weekly uptrend to be dead, you could be cautious on the daily because of what happened yesterday, which I think you should be. But it's hard to be like, hey, everything that we've done since October, screw it, it's over. Until the weekly trend reverses lower, and it's going to take a heck of a lot more weakness for that to happen.
Do me a favor now, since we're drawing lines here, draw me the resistance pivot as well from on the weekly chart over the 2022 resistance pivots on the downside.
Oh yes.
You see where I'm going with that?
We're having fun.
We're having fun with trend lines today.
That's right. That's right.
You also kind of see that converging point on the weekly resistance versus the support levels.
Correct.
There's some the general point being there's quite a bit of support in that little range there between that 400 and that 20 weekly there. And it wouldn't be surprising to me from just a pure technical perspective after the volatility hit for the buyers to start coming back in those levels. It's going to be choppy though. Would you agree with that?
Yes, it's messier than it will turn messier because the daily broke support. So yes, it's not as clean as it could have been, but the weekly is your lifeline if you're a bull and you're getting depressed over yesterday's break of support on the daily.
And would you agree with this? It's not that the weekly chart is like, oh my goodness, that's setting at support on a weekly chart with a weekly bull flag or a weekly bullish retracement. I don't think it's one of those situations where it's like, oh, you got to pick this up, right? I think it's more of the understanding that, because there's a lot of fear building there's always fear building when there's a violation of support, regardless of the time period, regardless of what the national conversation is, regardless of if it was in 1987 or 2000 or 2008 or in 2020, you violate support, there's always going to be concern there. But can this, I guess ultimately I've been hearing a lot of chatter of ultimately retesting those lows of 3,600 in the S&P, 360 in the ETF. And if we're going to do that, you certainly think the market has the ability to do quite a bit of things right now. But to do that, you got to break through a lot of different levels of support, including some pretty foundational ones there as well. And so I think for me, it just gives me some understanding that we got to work out this volatility, but that there is some decent support levels underneath the price action right now, including one that is legitimately right on the price action. I think I think more than anything, it gives us a little bit of confidence that this initial volatility that hit the market last week continued into this week doesn't continue to spiral like we saw oftentimes in 2022.
Correct. Yeah. Look at the downswings on the weekly in 2022. When we gave up the ghost, it was like, all right, we're
gone.
We're back to the lows. But you're right. You're right. The weekly chart does give you a little bit more confidence. It is the friend of bulls still. We'll see. We'll see if it snowballs. But I agree. I feel better now that you've brought up the weekly chart, man. I feel
Yeah,
better.
I just think the weekly chart is a great time frame to give context to the conversations we're having on a daily basis. What about on that daily chart here, Tyler? We're talking about a doji here today, not a lot of firing off in the broad market specifically. Intraday is a little bit of a different conversation. That's why I kind of wanted you to end on that time frame, because
Yeah.
again, for me, when we go through these sparks in volatility and it gets a little bit crazy out there from a directional perspective, obviously you want to see those time frames align. The weekly chart gives you confidence on where those things could occur at. The daily chart gives you the healthy dose of respect for the current volatility. It's the intraday chart that really kind of kickstarts everything, right? You start on those lower time frames and you start building into an argument from a trending perspective. And so from a daily chart perspective, Ty, I think for me, and again, agree to disagree here if you need, but we're just seeing a doji at support today. I don't have any other read besides a doji at support. What are your thoughts?
I'll match your doji and upgrade you a hammer candle and give
I like it. I like it.
SPY
I
a little
like
bit
it.
of
Little slight
love.
bull edge there,
It's
buddy.
it's skewed. Listen, it depends on when
It
we look
is
at
a
this.
hammer. It is
10
a
minutes
hammer. You're
ago,
right.
doji
You're
is
right. No,
yes.
you're absolutely right. I was technically wrong. I was just calling a doji a small candle. That's a hammer candle.
You're living in
Oh,
the you're
man.
living in the past, Matt. Okay, you're
I
30
have
minutes ago.
changed my tone of doji. I say we just get out there and giddy up and go and buy everything right now. Let's go hammer candle. I
We
like
just
it.
need to close the market now and be done,
That's
so we
it.
can move on with our hammer victory. Yeah.
That's it. Just give the victory on the hammer. What about the intraday chart here, Ty? Obviously, we're dancing the support dance. We got some slowing momentum on that hammer candle at support. What does the intraday chart tell you, and what do you need to see from the intraday chart to build a little bit more confidence in not just an intraday bullish move or bearish move, but something a little bit more long term? Because when markets do violate support, and I'm speaking from a swing trader's mentality, there's a healthy dose of, okay, let's be a little patient here and let this set
That's right.
up. What do you need to see here?
Well, I mean, I did the Traders Lounge this morning, Matt, and it was boring on the intraday chart. We were in a trading range, and it was dead sideways, and it was Doji Town. And so it's like, well, give me something different. Break the top side, please. What I said is I don't want a repeat of yesterday because it could have turned into that, and it may still, by the way. But I didn't want a break of the intraday support. I didn't want a continuation of the downtrend. And so far so good. It broke the top end of that little range. You're in a 5-minute uptrend. Okay, so bulls have a
you got to start
here.
on a time frame, right?
Got to start somewhere. You got to start somewhere.
No, and these intraday charts of where bulls have been most impressive going back months now, right? You know, like it dipped and then they consolidate and then they lift
We've
off.
seen a lot of failed breakdowns on intraday charts.
A lot of failed breakdowns. It's almost like a failed breakdown is the new bullish signal on intraday charts.
Well, honestly, that's why I'm not as concerned about this recent violation as we were concerned about some of the violations in 2022. And again, you always want to have a healthy dose of respect for a violation of support. That we anchor to support. We talk about support, where support's going to form. We go through the analysis of support builds. We anchor on support analysis so much. We got to respect violations of support. But I also the intraday data on breakdown analysis in the last 6 weeks has not been favoring the bears. Like breakdown analysis has been gobbled up on 5 and 15-minute charts nonstop. I mean, that's the entire basis for Mark's analysis on 0 days to expiration option trading, is that you get that initial surge down.
They get the surge down. And it happened a little earlier today than it normally does. It normally happens in the 11 a.m. Eastern hour, but but it happened a little earlier. But then you see during the 11 a.m. Eastern hour, they built that liftoff, and then they ride it, and they've done it so often. Like it's like maybe we go to 3,700. It ain't going to be in a straight line.
Well, there's a lot of maybes there, right?
Yeah, like,
but the journey's not going to be the same journey.
The zero data option expiration crowd has shown to me at least, too much the ability to win intraday battles constantly. Because where's the big fear event, right? And we talked about this on the podcast. Where's the big fear event, right?
The big fear event, I mean, they're all variables right now. They're all hypotheticals right now,
Yeah.
some tied to geopolitical situations. And, you just don't know how some of those conversations, I mean, China's going to be, for example, China's going to come out with a Ukraine peace plan on Friday. There's a lot of chatter on how China and Russia are starting to talk a little bit more friendly, and China might be providing some weapons to Russia, similar to what we're doing with Ukraine. And so there's a lot of chatter in that arena right now. Could something happen? Most likely it's par for the course, and we see a continuation of the same conversations that's been happening over the last few months there. But there's variables there, right? There's variables there that you don't know exactly how those are going to play out, but you just know they're there a little bit. But there's also, again, when we're having those, where's that big catalyst event? I'm not sure it can be the same conversation last year, and that's what I keep coming back to. It's most likely, if you ask that question to most people would probably answer inflationary conversation. But then again, I and that's probably because of the last 3 weeks of conversations of the Fed speeches, and then the increases in inflation that we saw in the CPI report and the PPI report last month. I'm not sure that's going to have the same impact in 2023 as we went through in 2022. And and if anything, just goes what Bullard said today. 3 weeks ago, Bullard and the Goonies at the Fed are talking about higher for longer, higher for longer, higher for longer, higher for longer. We're really concerned about inflation. We're really concerned about this. Market goes down one day. What does the Fed do? They change their tone. They legitimately, Bullard changed his tone quite radically from the December conversation to the conversation he had today with the market. And so I just don't know if there's that. And again, it could happen. It certainly can happen. We're talking about a violation of support with increasing volatility and increasing concern in the market. It can certainly happen. But you also have the opposite side of the equation there, with the bullish analysis being exactly what Bullard said today, that the U.S. economy is much stronger than what almost anybody anticipated 6 months ago. 6 months ago, everybody was crying for the end of the world economic analysis, and now we're staring down the barrel at a 3.4% unemployment rate, and manufacturing data, which is concerning, but has not been as concerning as otherwise anticipated. He also said the terminal rate isn't going to be 7%, which he was talking about 2 months ago, but it's going to be right around 5.4%. And we're already at that 4.75 to 5% number. And so higher for longer, once again, comes back to the understanding of, okay, higher for longer is more of, we push it to 5.4% because the treasury market has kind of been going haywire this week. And so you push that to 5.4%, then it flatlines. And so I'm not sure that would have the same teeth to the argument this year as it did last year, just because we've went through a lot of the difficulty in that conversation already.
Yeah, no, indeed. A nice little macro technical conversation there. Let's go flash over to commodities. Let's start with the dollar. Right? Kind of just, what is this?
It's a choppy 1, 2, 3 reversal is what it is. Technically, it is choppy though. It is choppy out there.
Because I'm used to the dollar in 2022 when it started going up. It was boom, boom.
It was aggressive and consistent.
This is like, yeah, what do I want to do?
Again, you have the higher for longer language, and the treasury market's been respecting that conversation. As yields are going up, the dollar's going to go up. As the higher for longer language happens, dollar's going to respond to that. As the economy has improved a little bit, dollar's going to respond to that as well. And so really what's happening here is you have the higher for longer, which is an interest rate conversation specifically on the dollar. And when you have an anticipation of higher interest rates, there is going to be a demand equation on the dollar in that environment. Same conversation, obviously a much more aggressive conversation on the higher for longer last year. And you saw that trend on the dollar. So if you just want to listen, if you just take away what I was talking about on how I don't see a repeat of 2022, look at the dollar. The dollar doesn't see a repeat of 2022 either. The volatility, the momentum, the upward drift that we saw consistently in 2022 on the dollar was constantly dollar's interest rate is going up. The carry trade is supporting the dollar, higher interest rates on the dollar. All of that conversation was a 2022 conversation, and that's the exact same conversation over the last 3 weeks since the Fed reported. It really wasn't the Fed. It was the ECB and the Bank of London report from the day after the Fed, when the ECB raised 0.5 and the U.S. Central Bank raised 0.25, and then you had the Bank of London raise 0.25. After that combination of central bank analysis, you just had the dollar start to take charge a little bit, and until the Treasury market slows down a little bit, and it has to. The thing is, it has to slow down because it's getting close to where ultimately you see the Fed kind of flatlining the interest rate. And so as the Treasury market does slow down, and I anticipate the Treasury market to slow down in the next week or so, more than likely you're going to see a little bit of slowing impact on the dollar as well. I think commodities need to be on the radar, both from a fundamental perspective, but I also think it from a pure technical perspective. And again, I still think we're waiting on the dollar to not just slow down, but to actually come back down and violate some support levels. I think
Matt,
that is ultimately what we're looking for. Everybody loves their cybersecurity companies moving over the next 10 years.
Yep.
Palo Alto, first and foremost, I think I really good report coming out of Palo Alto here today. That's one of the reasons why I want to start with it. A little bit of context. This is the third consecutive quarter Palo Alto has showed a profit for the company. They had 10 years where they struggled with that to a certain extent. So really good on Palo Alto. They also came in with a really good EPS beat here, 105 versus 78. That I don't want to call that utter destruction, but that is a healthy beat on EPS. Revenue didn't really follow suit, just came in line. So I can't give it a hat trick. Came in at 1.7 billion was the expectation. That's what occurred. Revenue went up 25% year over year, which is a decent number. But for a cybersecurity firm, you would want to see a little bit more growth into there. They might get that growth though, because they also increased forward-looking guidance, specifically EPS guidance. And remember, EPS was a really good story for Palo Alto in the quarter. Really good beat on EPS. They specifically raised their EPS guidance for both the quarter and for full on 2023 here. It's got 2 out of the 3. You got a really good beat on EPS, got an increase in EPS guidance, got an inline on revenue. It's a really good report coming out of Palo Alto. it's amazing. I'm pretty much kind of mentally in the zone of we're done with the earnings, but yet they keep coming nonstop. It's like we were talking about the horror movies on the podcast yesterday. Definitely check out the Trading Justice podcast yesterday. We had a really good conversation. With these earnings, they just don't stop. They just keep coming back and back and back and back. And here's OTJ Maxx coming out with 89 cents. That was the expectation. Revenue came in at 14.5. That the expectation was right around 14. And then they had a slight decrease in EPS guidance. I'm a little surprised it didn't gap stronger to the downside, quite frankly. What's your thoughts here, Tyler, on the technical conversation?
This has gone up a lot off the lows. I mean,
Kind of why
50,
it was boring report. Miss a little bit, market concerned. I was expecting a little bit more gap when I saw the raw numbers, and it was a little bit impressive at support.
Yeah, thanks, Matt, for the intro. So the thought here, as traders, we have so many like things we got to think about, or at least we could think about as we build a trade, as we pick a strategy. And so I wanted to just kind of go down maybe a checklist of sorts to help shape our understanding of what goes into deciding which strategy you do. Why did you do that strategy? Because it's not just a matter of what does the stock look like. It's also, well, what does the market look like? Do you care? Do you care about what the rest of the market looks like? Or are you just going to base your trade off of, in this case, Airbnb, right? The Airbnb chart. Do you care about like what's been working and your recent experience? What kind of trades have been working for you? What kind of trades have not been working? So I want to kind of think through that over the next 10 minutes here. So first of all, when you look at the chart of Airbnb, it's just delightful. It deserves to be on your fridge. It deserves to be the shining example of a bull retracement for multiple reasons. It's in an uptrend. It just had a great earnings report that caused a breakout in the stock with volume. Okay. And it was overbought after earnings, which made it really hard to chase, even if you really wanted to, because the earnings numbers were great and the chart was great. It was just extended. And so lo and behold, you get your 3-day pullback, right? Market's been a little bit weak. Airbnb was a little extended. Makes all the sense in the world that you got 1, 2, 3 bars down. It's now testing the 9, which is the first potential support zone in a strong uptrend. Look at it in January. You had a couple support levels there. And it's retesting its breakout area, old resistance. It makes all the sense in the world that this is where buyers would be like, all right, that's enough. That's enough. It's a great stock. It's on a great run. We gave you 3 days down. And it were 3 significant days, by the way. This wasn't insignificant. It peaked 4 days ago at 144.63. At today's low, it was 124.55. That's a $20 drop on a $145 stock. That's a 14% pullback. This isn't a 3% pullback. It pulled back 14%. Like there was profit taking there. Whoever wanted to sell into that jump, that earnings response, they had the chance to sell. It's now come down 14% and it's sitting at support. So you can build a very compelling case that this is one of the best stocks in the entire marketplace, one of the cleanest patterns. If you're in the mood of shopping, of buying dips, you're going to be hard pressed to find something as clean and quality as Airbnb. So the technicals, unmatched. Okay. How do you want to play it? You could be super aggressive here. You could buy a call option. You could be way conservative and sell an out of the money put. You could do a bull call. You could do a bull put. Like you've got your spectrum here from super aggressive to super conservative. Like, how do you decide? That's what I want to think about. For me, I find it too short-sighted to just look at Airbnb all by itself and just trade Airbnb, because I know that Airbnb, as well as any individual stock, doesn't exist in a vacuum. It is subject to pressures that are going on, the sentiment around stocks in general, the risk appetite of investors. And I can't really gauge that just by looking at Airbnb, right? I kind of care about what the S&P looks like, because to a certain extent, they're connected, okay? And so in the back of my mind, I've got this support break yesterday. And I know that the trend of the S&P isn't on as sound a footing, at least the daily trend, as it was before yesterday, right? And so I'm like, do I care? Like, is that going to influence me doing Airbnb? Maybe it wouldn't be a reason not to take the trade, but maybe it would be a reason to be a little less aggressive, right? So I got that in the back of my mind. Maybe I don't want to buy calls on Airbnb in light of me downgrading my bias on the S&P based on yesterday's support break. The other thing in the back of my mind is what's been working over the last month. I don't know about you guys, but I haven't found directional bullish trades all that easy over the last month. I know that we had a great first burst January. The first month of the year was great. But ever since the turn of the month into February, it's been choppy sideways and down. And I know that those who have had long calls and bull calls and more directional trades, it's not as if they've had a great time this last month. Okay, maybe they got lucky and their stock went up when the market went down, but I'm thinking most directional bullish traders have not had a good time of things. And I don't know that that's going to change when the S&P just broke support. Okay, so directional trades, I think, have been challenging in this environment. The market's telling me to be a little bit more conservative in this environment. Those I can't help but bleed into my thought process with how I want to trade this pullback in Airbnb. Okay, for those reasons, I don't have as much confidence in buying a call option. Okay, I don't have as much confidence in doing a bull call spread even. For those reasons, as well as just my built-in predisposition to want higher probability cash flow trades and my ability to better manage those versus directional, all lead me to want to do something like a bull put spread in Airbnb. And naked puts will work too. It just depends on if you want to reduce the cost. But I lean that way on Airbnb, despite the fact that it's a glorious pattern, as I gushed about a minute ago. And so the way that I would prefer to play this, and I'll just give you two kind of side-by-side examples, instead of me coming out to April and buying I'd probably even buy the one, I don't know, what's my target, 140? Yeah, I mean, I'd probably do like a $10 spread. So I'd buy the 130 call, I'd sell the 140 call. I could go wider if I wanted to, but I could build a nice bull call spread. I think I'm going to make money on this. If it gets up to 140, that would be the directional play. Or I say, yeah, I got to respect the market breaking support. I got to respect the fact that bullish directional trades have been a little tricky lately. I think I prefer some kind of bull put spread. I'm going to go out 30 days. It is challenging on those monthlies. We're getting to where we're 3 weeks out from the monthly. Tough to find premium there. I can go out 30 days. I can sell a 110 put. I can buy a 105 put. I can get almost 60 cents, about 11-12% return. And then instead of making money because I'm betting Airbnb is going to get up to 140, I'm just betting it's not going to break 110 in the next month, because I don't think it will. It shouldn't, if this trend means anything. Okay. And so my preference here is lob a $5 wide out of the money bull put or some variation of that as my way of capitalizing on what is undoubtedly a very clean, nice, bullish retracement, but respecting S&P kind of garbage right now. Directional trades, aggressive directional trades haven't been working over the last month, and I don't have the confidence to go against those two things and throw on a directional trade on Airbnb. So you take that framework. What does the chart look like? What does the market look like? What's been working recently? What's kind of my recent experience with the market? That you ball all that up, and that to me is how a trader may try to navigate rules and guidelines and specific checklists of what you should do with kind of the intangible. But how do do you care about the market right now? Do you care about what's been working? Do you give deference to those? That's how I would strike the balance right now in this market with this particular chart in Airbnb.